Before placing a trade in a live account, you need something called a Forex broker. In this video, I'm going to talk to you all about Forex brokers, how to go about selecting one, how to avoid potential scams, and then by the end of this, hopefully you'll be able to make an informed decision on what's best for you. I'm Kenya, owner, educator, investor, and professional trader with BK Forex Academy. We help new and struggling Forex traders learn how to trade with guidance so that you can start the right way, have a breakthrough, and trade with confidence. Let's go ahead and hop right in. All right, so how to select a Forex broker? Well, let's talk about what is a Forex broker in the first place. If you're first getting started, you probably don't even know what is a broker. So very simply put, a Forex broker is basically a financial services company that provides a platform for you to be able to place, buy, and sell trades in the market, okay? They make money by charging you a commission, basically a flat fee. Some of them have variable fees for the trades that you place. When you are selecting a broker, there are a few things that you need to know. You have two options. You can choose a regulated broker or an unregulated broker, and this doesn't matter where you live in the country, okay? Regulation basically helps to ensure fair and ethical behavior towards traders, towards people like you and I, which are also called retail traders in the market. Regulated brokers, they have to operate in compliance and they have to follow very strict rules and standards, or else they can't operate their business. So regulation is a good thing, and this is usually laid down by Forex regulators. Okay, now when you are going with an unregulated broker, one thing you need to know about unregulated brokers is that they do not follow any rules or compliance, or it's very limited. Okay, the primary purpose of regulation, like I said, is basically to protect investors like you and I from fraud. Now, one of the things I encourage you to do is to research the term Dodd-Frank Wall Street Reform Act to better understand regulation and how it came about in the first place. Because when you are researching, you might hear some negative feedback about regulated brokers, and you also might hear a lot of negative feedback about unregulated brokers, and you'll also hear people's positive experiences of what they like in both. And so if you understand how it came about in the first place, I think it will help you to make a more informed decision. Now, after you do that, you can then decide what's best for you. One of the regulating bodies in the USA where I'm located is called the National Futures Association. So wherever you live, you can actually do a search and you can just type in regulated brokers, regulated Forex brokers in Australia or wherever you're located in the world. And you'll probably get the top list of brokers. If you're looking for unregulated brokers, you can also do a simple search. If you go to a regulating body's website like the National Futures Association, you can type in the search bar whatever broker you're looking for. So for example, you'll see I have Oanda pulled up here, and you can find out everything about that broker. So if you look at Oanda, for example, you'll find all of their entities, where they operate in the world. You'll also see if they've had any type of regulatory actions against them, what is the status of it. I mean, you can see pretty much everything. So that should help put you at some ease as well. The only thing I want to share with you is one thing that a lot of people miss, especially when looking at regulated brokers, is that they don't read the disclosures or fine print. So when you go with a regulated broker, although there is the claim that you're protected, in a lot of circumstances, you really are not, or you might not be, or there's limited protection and that's really not stated, or people don't really dig into the fine print to show you that. So whether if you're with a regulated or unregulated broker, you always want to read the disclosures. For example, you can see number 10 highlighted here on my screen. This says that with Forex.com, you may not be able to close some of your open positions, meaning that if you're in a positive trade in the market and you try to close that trade in profit, or you have a take profit target and it doesn't get you out of the market, they're basically saying, hey, you can't hold us liable if that trade doesn't close in profit. That's something you need to know, because people do actually experience that, okay? So let's talk about unregulated brokers. Now, there are several there's actually a lot of unregulated brokers out there. Hugo's Way, Trader's Way, IC Markets, KLT Forex, these are just some of the known ones. Some of the pros of trading with an unregulated broker, why do people choose them? Well, you get high leverage. You also have low spreads. Your spreads affect the commission that you pay to the broker. You also have low starting balances. Some of them you can trade with as little as $10, although I don't recommend that. When you're first starting and just kind of testing things out, then yes, but to make money every day, no, you need capital. But also, you can start with low fees. Now, some of the cons with going with an unregulated broker is that there's little or no regulation, your investment is not protected, and also, which means that puts you at a very high risk. Okay, so those are things you want to think about. Now let's talk about regulated brokers. In the US, I think we have 7, no more than 9, but just to name a few here, we have Oanda, Forex.com, and IG. You can look at some of those. Now, some of the pros of going with a regulated broker: one, they are regulated, which means that they have some type of protection, hopefully in place to protect your capital if something bad were to happen. Let's say if they went bankrupt or anything were to happen, hopefully your money will be protected somewhat. So there are supposed to be strict rules and regulations in place that protects the investor. However, I always caution you, read the fine print, because that is not always the case. Okay, some of the cons of going with a regulated broker that you're going to find is that they have low leverage, which can affect you if you have a very small balance. Also, you're going to pay higher commissions with a lot of these brokers, and they have minimum deposit amounts, meaning that you have to deposit maybe $100 or $200 to get started. So depending on your goals and what is important to you is going to help you determine which broker is best for you. I'm going to give you some tips. Tips number 1, consider your goals and your risk appetite when you are selecting a broker. So for example, decide if a regulated or an unregulated option fits your current goals. Maybe if you're a new trader and you're just getting started, maybe it's not so important for you because you're not opening a live account right away. So in that case, maybe you'll try out both and see which one works best for you. And here it is. You can try both options on demo or a small live account. Tip number 2, transaction costs. So this is another consideration of something you want to consider when you are selecting a broker is what type of costs are you going to incur if you go with this broker? So brokers make their money from spreads and commissions. And if you're new, you might not understand the term spreads. That's something that you can get more into through an educational program or when you take the time to study. But these are just things that I want to share with you so that you know what to go and research or look up when you are looking for yourself, okay? Some of them are going to have competitive spreads and commissions. Some of them will not. With other transaction costs, you're going to look at some have high fees and spreads that will impact your profits, so you want to take caution of that, and you want to ask questions from the broker. You want to make sure that the transaction costs won't hinder your results as well, so the higher the spreads and commission fee, of course, that's going to affect the type of profits that you're making in the market, okay? Tip number 3, you want to make sure that they have an easy deposit and withdrawal system. So do they offer credit card deposits or withdrawals, or can you do a wire? Some wire fees are really expensive. I personally don't do wire. My favorite process is Bitcoin. It is extremely fast. I've always gotten my money back. I'm talking about thousands of dollars. I also have deposited securely. So I've never had a problem depositing or withdrawing with Bitcoin, and that's my preferred method. So you have to look at all the various methods out there and see what makes you comfortable and just try out a few if you don't know where to start. Okay, understand the method for depositing and withdrawing. Also, ask their time frames for depositing and withdrawing. So for example, I remember that I had a trader go with a particular broker and they put in a certain amount of money. And when they went to withdraw that money, the broker told them that they could not take it out because they had to only take out the amount that they started with. So if they put $2,500 in the account and there was only $1,000 left, they could not take the money out unless there was over $2,500 in the account, which means that they would have had to deposit more money and then get to that balance and then hopefully withdraw it. So just make sure that there are no type of restrictions hindering you in that way. Also, you want to ask, can you withdraw your money right away, or is there withholding times? So that's important. When you're withdrawing your money or depositing, you want to know what are the restrictions in place that are possibly going to delay any time frames. Tip number 4, you always want to research their customer service options and see what do they provide. For example, who can you contact if there is a problem? What are the hours of operation? Also, do they have a virtual live chat option? I actually like the virtual live chat option because a lot of times they have someone there 24/7 that you can contact, and that is very helpful. Can you call or reach someone immediately? If I have a live chat option, that's not so important to me. I don't have to speak to someone live, but that might be important to you. So think about it. If you want to be able to reach someone live over the telephone, then that might eliminate a lot of options for you, but write that down. Write down what's important to you. All right. If not, if none of these things are available, then beware of a potential scam. That could be a scam in place of someone trying to take your money, and you definitely won't get it back. I mean, if they don't have a great customer service platform or someone that is very responsive, they don't provide reporting to you of your trades, they don't have a professional platform to trade on, then those are all things you want to stay away from. Tip number 5 is you want to look at their trading platform and their tools. You basically want to know, do they provide professional and easy resources for you to trade? Some of them have really fancy websites with great content on there, and some of them you'll look at it like, what is this? And so you just want to make sure that they're providing you professional resources to trade. Look at the educational tools, see if there are things that you like that will really help you in your journey. Also, look at their website and make sure that it's user-friendly for you. It's not a difficult platform to navigate. And yeah, those are a few things that you want to check out. So in conclusion, I would just encourage you to research. That will help you make an informed decision. Consider reviews, but remember, try out brokers for yourself. Don't go off of just what people are saying out there in the marketplace. Really get the information like you're doing here. Consider it, weigh it, research some more. It'll help you make an informed decision. Read the fine print. Always read the tiny disclosures. Ask lots of questions from the broker before you start. Get on there, get it in writing, and just do your best to get lots of questions answered, and hopefully that will help you. Start in demo, note the pros and cons for yourself. So note what you like and what you don't like about that particular broker, and then go from there. So I want to know from you, what is one helpful takeaway you received from this video? Comment below. Also look in the description of this video and you'll see more information on our free Telegram and everything else that we offer. Don't forget to subscribe and turn on notifications. I hope that this video helped you, and I'll see you in the next one.